Hi and welcome. You're listening to the X22 Report. My name is Dave and this is episode 1479A and today's date is January 23rd, 2018 and the title of the episode is Flashing Indicators Show Housing, Jobs, and the Economy are going to decline rapidly. Let's get into the economic collapse financial news. Now, we've been talking about housing, jobs, the economy, and we've been looking at many different indicators showing that the housing market has been blown up into these bubbles in 20 different cities. The job numbers we know are completely manipulated, and most of the information that is coming out is to keep the illusion alive. Now, Chris Hamilton from Economica blog, the individual that wrote that most of the people in the United States are going to lose 30 to 50% of their wealth when the market comes down, also wrote another article and analyzed the housing market, the job market, and the economy. And he's saying that we are ripe for all of this to decline rapidly and bring us into a recession. Now, I'm not really surprised about this because we've been looking at these indicators, and he comes at it from a different angle, which is very interesting. He says that U.S. housing starts and job creation are set to decelerate, and a recession will almost surely follow, sending home prices tumbling, and most likely equity and bond prices that will also come down, and severely negatively impacting U.S. households' net worths. Now, we talked about this before, where the net worth of each individual is going to come down, and I believe that number is going to be much, much larger. Now, if we look at this, we can see that, first of all, the year-over-year change in housing starts is highly indicative of the subsequent change in a 12 to 18 month of full-time employees. Now, he created this chart, and if you're on YouTube, you can see the chart because I'll display it, and if you're on the X22 Report, you can go there and you can see the chart there. Now, he has full-time employees year on year. He also has housing starts year on year. When housing starts to fall, jobs follow. We saw this back in 2008. All of a sudden, housing started to come down. And guess what happened? Jobs followed. Now, what impacts housing creation? Well, of course, the federal funds rate, housing start, and what is noteworthy is the interplay of changing debt creation and federal funds rate on new house creation. As debt spending accelerates, interest rates are cut and housing creation is prolific. Conversely, when rates rise, typically federal debt creation decelerates and housing creation declines. Now, he created another chart for this, and if you're on, again, the X22 Report, you can see it. If you're on YouTube, I'll display it. Now, what we look at, we can see that housing starts year on year and federal debt year on year. We can see how it correlates. As the debt changes, guess what? So does housing. When debt is increased, housing surges. Let's go back to certain periods of time here. If we go back to the 80s, we can see that debt was increasing at that time and houses surged. When debt started to come down in the mid-80s to the 90s, housing fell. If we look at 2008, we can see the debt was moving up, so was housing. As soon as debt started to fall, guess what? We saw housing decline. Debt was ramped up right after the financial crisis of 2008, 2009, 2010, 11. They kept on pumping currency out with QE, taking on more debt, and housing surged. Now debt is declining. It has been declining since 2010. And this is the federal debt that they're pushing out there. And what we're seeing right now is that is making housing decline. Plus, we have individuals who can't find work. individuals that don't have a savings. Now, I know the corporate media is out there saying that millennials have $100,000, put aside here someplace and they're getting ready to spend it, which is absolutely ridiculous, because if that was the case, we wouldn't see the delinquency in, let's see, student loans. We wouldn't see the delinquencies rising in auto loans. We wouldn't see any of this. We wouldn't see people using their credit cards all over the place. It makes no sense whatsoever. And we are headed to a point in time where we're going to be in a lot of trouble. There is trouble dead ahead. And we are definitely seeing this. Now, everything that we looked at in the past is pointing and flashing that, yes, we are headed into a major collapse. The economy hasn't changed. Since 2008, when it all came down, they didn't fix anything. I mean, think about it. The Fed purchased all the toxic stuff, toxic loans. They bought up all the bonds. They bought up a lot of the debt. And they have $4.5 trillion on their books. Yes, they're trying to get rid of it. But then they had other central banks take over to buy stocks in the stock market to pump it up. We have Europe, where their interest rates are in the negative territory and they're still pushing QE. We have interest rates very, very low here in the United States. And it's a complete disaster. Retail is continually slipping and sliding. It's not improving whatsoever. The housing market, well, their houses are only going up in these 20 cities. The rest of the place are either flatlined or falling right now. Restaurant traffic is declining. Movie theater traffic is declining. Revenue in all of these places declining. And we see that corporations, they've been, since the market's been going up, they've been buying back their stock, but closing plants, laying off employees. They haven't been showing revenue. They haven't been showing profit. They haven't been showing any of this. We saw this back in 2008, where they kept the illusion alive to make us believe that all these companies are doing great, until they came begging for billions and billions of dollars, because the lie, the illusion, fell apart. The same thing's happening right now. We see the Richmond Fed. It has suffered the biggest 2-month drop since 2006. And what we're seeing right now is that we went from a record high in November 2017, and now it is collapsing. What do we see happening here? The number of employees in average work week plunged. We see new order volumes in a 6-month time tumble to its weakest since before the election. And I think all the hype from the election, from Trump and everything like that, it's starting to fall apart now. He's been in the White House for a year and everything's starting to fall apart. And I think those individuals in his administration knew that this was going to happen. They try to pump it up just like the central banks have done, just like the deep state has done over the years, to make us believe that the economy is doing well, because in the background, they're preparing for this major, major transition. And the only way to do this is to make everyone think, and make the corporate media think, and make everyone think that the economy is doing well while they transition and they set up the central banking system. They set up those individuals that created this entire system. And again, he can switch it around and say, listen, hey, I had the stock market going up, I had this, and the Fed, they were raising rates, they were doing this. This is their policy, and they brought the system down. He's trying to maneuver to do the old switcheroo and blame it on the central banks. We see TD Ameritrade. The CEO is warning that he's never seen client cash levels this low. Morgan Stanley said last year that client cash levels are at record lows. And he's saying that the cash balance of equity mutual funds is at an all-time low of 3.3%. And this is very worrying. We see that Trump is pushing trade wars with China and with South Korea. Remember, going back in time, who had this trade deal with South Korea? Well, George W. Bush. He signed a free trade agreement with South Korea. And right now, there is tariffs being put on solar panels, on washers and dryers, and things like that. This is the beginning of taking down the system. The system that we see today with credit, with debt, with borrowing, with the government borrowing from the central bank with interest attached, this whole system needs to be broken apart. You can't stay in the system. It's based on the petrodollar. The petrodollar is falling apart because what is happening right now is that the Middle East, well, the people are taking back their countries. Yes, the deep state, the cabal, they're trying to push their agenda in all these different areas because they know that if they let this go, their funding disappears. The petrodollar was created to fund these individuals, to keep the central bank operational. It wasn't there to help the American people because they knew eventually the system would reach a plateau and then start coming down. So really what you have, it's almost like a bubble if you really think about it. In the beginning phase of a fiat system or a fiat system where the central banks control the entire system and they can create currency out of thin air, you have the graph moving up, the bubbles being pumped up to the entire system. Everyone feels good in the beginning, and as you keep moving up the graph, more debt is being created, the bubbles are being blown up, the economy is getting out of control, and the graph keeps going higher and higher and higher, and you finally reach a point where you say, okay, something's going on here. We're at the top here, maybe not at the top, but very close to the top, and we have too much debt. Everything's an illusion. The whole thing cannot be sustained. We might have a little downturn like in 2008, which is a dead cat bounce, and all of a sudden, we're moving back up again. And all of a sudden, we're saying, hey, everything's great again. But it is fake and phony. We've seen this in bubbles where the bubble rises and we have a little dead cat bounce and it rises a little bit more and then all of a sudden it pops. It's the same thing with the central bank system. There's no difference whatsoever. That's why we see all of this happening. This is why they create bubbles and pop them. The central bank system is a gigantic bubble that every 40 to 45 years, or maybe a little bit longer, I mean, there's no exact science to it, it eventually pops and they need to recreate the whole thing. And what they do is they transfer everything to a different location using a different currency. It's the same exact thing that we've been seeing in the past where if you look on a smaller scale with housing, with the U.S. economy, with Canada's economy, with Australia's economy, with the European economy, it's the same thing. The bubbles get pumped up. There might be a little, correction, and then it goes up a little bit more, and then the whole thing pops. Well, that's the central bank system in a nutshell. You've been seeing it all along. Now, on a bigger scale, that's how their entire system works. And once the bubbles get so big that they cannot be sustained, guess what? They need to pop them, which means they have to collapse the system, and they have to restart it someplace else. It happened prior to World War II. The system got unsustainable. It couldn't move, it couldn't go anymore. The UK had the reserve currency. After the war, the US had the reserve currency. And if you go back in time, you can see Spain had the reserve currency, France had the reserve currency, and you go all the way back in time, and they only lasted for a certain period of time, and everything popped. And this is what we see happening right now. And the only way to get rid of this system, to get rid of the central banks, is to destroy their system. That is what is happening right now. Now, we know the central bankers, they don't want their system destroyed. They like their system. And Bitcoin, the cryptocurrency market, is a threat to them. And it looks like here in the United States with the Treasury Secretary, Mnuchin, he's looking to create regulations to control Bitcoin. And South Korea, I believe, is a test bed for the crypto market. And what they're doing there is that people in South Korea will have to go to one of 6 banks in the country if they want to buy or sell Bitcoin or any other cryptocurrency on the exchange. And the change will be effective January 30th. The use of existing trading accounts not tied to a bank will also be banned, and the exchanges will be forced to share transaction data with the banks. So they will know everything about you. You'll have to go through the banking system, and they can keep track of all of it. Again, it's about control. They don't want the people to have a free and open currency, separate and apart from a controlled system. They like their control. And this is what we see happening right now. And most likely, just like everything else, just like the bail-in documents, where Cyprus was the test bed, the test case, where we see a cashless society with India, where they started to remove some of the cash, and Europe and the United States talked about getting rid of cash. Eventually, they want to get rid of all cash. That's a known fact. And they don't want a system that is out there that they can't control. And that is the blockchain system where they don't have control of it. They don't want this. So it looks like out in South Korea, they're testing to see how this works. And I wouldn't be surprised if now other countries all of a sudden decide, you know something, we want to do the same thing because it's these terrorists, these criminals. They can't remain anonymous. We have to know who's doing what. And they will put it into law to say that every single person has to go to one of these institutions, which is controlled by the central bank, to purchase any type of cryptocurrency. This is what they're trying to do right now. And they can keep track of who is doing what. So what? So they can tax you. So they can make sure that this is a controlled system. And it looks like this is where they are headed. But we can see as the economy continually deteriorates, as housing deteriorates, as jobs deteriorates, as the economy deteriorates, the whole system is going to have to be rebooted. And this is the end game. The end game is who is going to reboot the system and who's going to control the system. Is it going to be we the people, or is it going to be the central bank system? That's what's up for grabs right now. And there is a fight to see who's going to grab the prize. And it's going to be a fight to the end. So no matter what happens here, you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.